All right. So now does everybody hear me? Everybody should be able to hear my voice now. Good, good, good. All right. So technical difficulties. We will try all of this again. So I apologize for all of this. Technical issues. It was honestly just a fault of mine that I did not see. All right. So hello, everybody. All right, so we're going to start all over from the beginning of what I was talking about earlier. And first thing first that I was actually going over was the whole issue with FXCM. Now, for everybody that doesn't know, FXCM is leaving the United States of America. All right, they have been probed by authorities and into one subsidiary, and the two founders were actually punished for misleading customers. And they are selling their entire customer base to gain capital. For those that don't know gain capital, that's forex.com. You probably know forex.com. That's gain capital. And they are selling every single person. Cool. Glad you can hear me. Um, they're selling all their client base and transferring their clients for $500 per client. In this whole mess, they're also getting rid of 150 employees as they leave the U.S. But Gain Capital is going to be paying $500 per transferred client account over a 153-day period. Now, for the transfer to complete per person, per client, that client has to execute at least one new trade within 76 days of this 153-day period. So if you're not executing trades regularly, I don't know how that's going to go yet. All right. I don't know. I'm going to have to find out. This is something that only came up 2 days ago. And I actually found out about it yesterday. So I actually posted about it as well, something that I had read on Bloomberg. And so FXCM is leaving. You're going to be transferred to Forex.com. And the transfer should happen smoothly for, most people. All right. I'm sure that there will be some people that will have to remove their funds from FXCM and transfer themselves somewhere else. I don't use FXCM anymore. FXCM, I never really had a problem with their brokerage per se. I used to use FXCM, and my issue was on their MarketScope platform. But I don't use FXCM anymore, so it doesn't affect me. I'm with Interactive Brokers and, and a couple of others. But again, the FXCM gain capital should move quite smoothly. But today, what I really wanted to talk about was was the most important aspect of technical analysis. Now, a lot of traders actually get this wrong. Most people that trade, their idea of technical analysis is, entering and exiting the market when a particular maybe a moving average crossover happens. So they have one moving average and another moving average of two different time frames, crossing. And when that particular cross happens, they buy or they sell according to their plan. Or they're doing some MACD stochastic type system. And that's their idea of technical analysis. And the most important aspect of technical analysis is actually structural analysis, being able to simply read a price chart. And it's really odd because I've talked to thousands of traders, and for most traders have no idea how to read a price chart. I actually sat down with a person that was in the business for about 9 years, and this person honestly could not give me definitive answer of what an uptrend or a downtrend was or how to recognize consolidation. And it kind of blew me away that a person of 9 years didn't know this. Now, I will say this. I am not perfect. And I traded for over 2 years before I could properly read a price chart. And it was through a particular course that I had purchased that I learned how to read a price chart properly. But think about that, 2 years not being able to tell, what really is an uptrend or a downtrend or how to recognize consolidation. And I was trading live. And a lot of people out there are the same way. They're trading and simply can't read a price chart. Structural analysis is the most underrated and overlooked aspect of trading, hands down. People just don't get it. Now, markets really move in just three ways. They can move up in a bullish trend, down in a bearish trend, or move sideways in consolidation. That's really it. And consolidation, for those that don't know, is just there's really no clear sign of direction, which way the market is going to go for one reason or another. Maybe something is going on in the world, like this whole Trump being elected. There was a period of consolidation because no one really knew what was going on. But that's essentially it. All right, that's consolidation. It's just moving sideways. It's not making any higher highs. It's not making any lower lows. It's just moving sideways. And we're actually going to get to the charts here. So I can kind of explain a little bit about what structural analysis is. Now, on our site, we actually have a structural analysis course that we will go through every aspect of structural analysis. I just kind of want to give basics so that you as a trader kind of know what you need to study, where you need to go, what you need to know. Because again, a lot of traders, they simply just don't know this information. So before I do that, let me get to my disclaimer. I am not guaranteeing that you're going to make $1 bajillion in 2 weeks, and I don't. This is all for information purposes. I do not have a license. I am not a licensed investment advisor. I'm simply a trader, someone that has traded for nearly 6 years, five and a half years. And, I'm a very consistently profitable trader. I've made a ton of money in this, but you could lose it all. So again, this is just for information purposes. So let's go ahead and get to the charts. Can everybody see my charts? Can everybody see this over here? Give me a yes or no in the chat if you can see this. Yes, everybody can see my charts? All right, so going to continue. So, before I get into this, I just want to say that we just had our 1 year anniversary a couple of days ago for our Supercharge Your Trading Podcast. Now, our Supercharge Your Trading Podcast, it was originally called the FST Trading Podcast, eventually became the Supercharge Your Trading Podcast. And over just a period of 1 year, we had nearly 2 million downloads. To me, that is insane. And I really think about that most podcasts would not get in a single year 10,000 downloads, let alone nearly 2 million. And, I thought that we were breaking 2 million. It didn't happen, but was incredibly close. It was like 1.98 million downloads. It's just insane. What that tells me is that a lot of people out there like what I'm saying and are actually getting some valuable information from it. And that was my goal all along, is to give you valuable information, actionable information that you could actually use to trade. It was, no intention to sell you a whole bunch of stuff and just have it be a marketing thing. I wanted to teach you things. And here shortly, we're going to also be bringing in a few people to interview. And one of those interviews is going to be Scott Carney, who is a creator of harmonic patterns. I am primarily a harmonic pattern trader. As you can see here, this is a harmonic pattern. But I think it's going to be valuable to you. I want to not just bring in a whole bunch of people to give some base comment and life stories. I think it could be, very valuable to you to hear their story and for them to give you things that you could actually use in your trading. So Just wanted to bring that up. I'm actually really proud that we made it over a year and a couple of days. But, um, I just want to thank you all for listening to the podcast. If you have not heard the podcast yet, go over to iTunes, and you can get there by going to karmasenge.com/iTunes and listen to the podcast. I really think the podcast is amazing, as do others, and I think you can get some really valuable content from it. So, all right, moving on to the charts. I hope everybody can see my charts. So what structural analysis is, again, is just being able to read the price charts. And we're going to start off with a bull trend, all right? How to recognize a bull trend. It's actually quite simple. So first we're going to have a starting point, all right? And we're going to name this starting point. Uh-oh, something going on. Let me get rid of this. Let's name this starting point. All right, so here we have our starting point, and we have this move up. All right, now this move is what we call an impulse leg. All right, an impulse leg is simply a kind of a move in one particular direction. All right, next we're going to have what we call a market retracement. All right, and we're going to put this here. Some people, I know, like Jason Stapleton's group over at Trading Power, they call this an outside return. I call it a market retracement. There's no right or wrong to which one it is. It's just, whatever you want to call it. But essentially, that's all it is a market retracement. All right. From this point, all right, it's going to retrace to some level. It could retrace very shallow, maybe to a 23.6% Fibonacci retracement, or it could come all the way down to almost meeting this starting point. Now, if it does actually meet or exceed the starting point, this would not actually be our starting point. All right, we would most likely be in some sort of period of consolidation. But we're just going to say that the market's going to retrace to here. All right. From that point, the market's going to move north. Now, and again, we're talking about a bullish trend here, how to recognize a bullish trend. Now, what's going to happen is market is going to come back and retest this initial structural high. So we can call this point over here initial structural high. All right. And for this to be considered a trend, this point here actually has to break above the initial structural high. Now, I get a lot of questions on, is it the wick? Is it the body? What has to be above? All right. So it's easy enough to explain. If I have, let's say that this is my candle body. All right. And this right here is my wick. All right. This point here, all right, I would not consider that this is still in trend. All right. For me, what has to happen is we have to have a higher high. So this point here has to be broken. As we can see, it is here in this wick, but we have to have a higher close as well. So that candle body itself has to close above our initial structural high. All right. So at that point, I would consider this in trend. All right. So again, once the market pushes past the previous structure high, at some point it's going to retrace. All right. And we have another market retracement. All right. So we have a, give me 1 second. I hit the wrong tool. So here we have a market retracement. And here we have our new structural high. All right. This is now our previous structural high. All right. And again, it's going to be the same thing. All right. If the market is to continue in trend, it's going to reverse at this point. Again, come up to the same exact point to retest this previous structural high. Again, for it to be considered in trend, it has to break this point. All right. And not just the body. We have to have a higher high and a higher close. All right. That is essential. All right. And as you can see here, we have higher highs. Oh, let me get another one. Higher highs. And we have higher lows, which is telling us that the market is in trend. All right. And again, we'll have a market retracement of some sort. The market might push back up to retest this new structural high. All right, and then here we have our market retracement, or MR, as it shows with these abbreviations. But now, at some point, the market is going to exhaust itself. It's really, it's going to happen. At some point, the market is not going to be able to break above this new structural high. It's just not going to happen. And at some point, that might fall, breaking previous supports. All right. So here we have a previous support level. Here we have another support level, and so forth. All right. At some point, it's going to start breaking those points. All right. But do we know yet that this is really not still in trend? No, we don't know. We have to wait for what we call a 3-point move. All right. So this would be 1 point. Now we have to wait for another market retracement and a push farther down. All right. So here we have this move down. It's broken 1, 2 support levels here. All right, as we can see. It's given us a market retracement, and it now is starting to continue in a bearish move. Now, for this trend to be considered broken, this bear trend, this point here, has to break below this previous structural support, and it has to close. Just like in an uptrend, it has to close below this previous structural support. So now once it does it, and that has to be the candle body as well, not just the wick, the actual candle body. All right. Now we know that that this particular bullish run is over. All right. That trend is over. And now we are starting a new trend. Now, another thing that you want to look out for are previous resistance and previous support. So here, as we can see, as the market moves up, all right, on this upward trend, where does it retrace back to? If we actually pull out lines, all right, boxes here, we can see that in this particular move that price action pulled down to pretty much where the previous structure resistance was. Previous resistance now becomes support, as Jason Stapleton likes to say a lot. And previous support will become resistance. And this happens all the time in trading. If you look at the charts, we will see this motion. So here again, as it pushes up, where does price action come back to? Previous structure resistance. All right. Once the market breaks down and starts coming back down to, that trend is over, what we have now, again, once the market breaks through a certain level, most of the time, not all the time, but most of the time, it will come back to retest that level. As we see here, the market broke through this previous support level, all right, which was here. It retraced up and now becomes resistance. All right, can you see how powerful that this can be? This is what structural analysis is about. And again, we have an entire course on the website. You can go check it out at karmasenge.com /shop and look at the structural analysis course. But this is what it runs through. This is more important. Let me actually go back to the camera. So this is more important than being able to read a moving average crossover. All right. This applies to absolutely any particular trading system, not just, one particular trading system or software that when you move from that system or software, you have to start all over. All right. If you can read a price chart, you can take any system and be able to use it more effectively than if you don't know how to read a price chart. It's incredibly, incredibly important. Structural analysis is ridiculously important. And I'm going to keep saying that. It is incredibly important. So that is what I feel is the most important aspect of technical analysis, is simply how to read a price chart. So with that in mind, does anybody have any questions? Don't forget, you can ask questions either over on YouTube Live or at our website, karmasenge.com /live. So if you have any questions, you can go ahead and ask them now. Nope, no one has any questions. I'm not seeing any questions here. So, all right, guys. Well, that's all I have for you today. I appreciate you being on this live stream. Again, I am going to be doing this every single day, Monday through Friday at 12 p.m. Eastern Standard Time. So if you want to come and join me on here, again, go to karmasenge.com /live, and you'll be able to actually take part in the discussion. So we'll see you tomorrow, guys. Thank you so much. Bye-bye.